quite a busy news flow day, but ArcelorMittal perhaps standing out, and BHP Billiton. BHP Billiton certainly heeding caution over this global economic recovery. Where do you stand? Again, there's volatility out there and there are so many mixed signals. How do you, on a day-to-day basis, try and really take this information and make a call on where markets are headed?
Yes, I think, Bronwyn, there is a lot of volatility, but I think at the end of the day you have to go back to the fundamentals and look at true organic underlying performers and drivers of the counters. We're still structurally very bullish on China. We still think, therefore, there are structural issues why we will see sustained uplift in commodity prices. If you look at the BHP Billiton numbers, in fact, they surprised the market on the upside. Yes, I think there was a slightly cautious outlook from BHP Billiton, but I think a sanguine outlook from the chief executive, Marius Kloppers, I think is right. Markets have run hard, but we don't see no reason for a significant pullback in demand. In fact, we see significant structural reasons why there should be sustained demand going forward.
As you point out, we had that underlying profit up above analysts' expectations at $5.7 billion. The big question is whether the competition authorities are going to allow the JV in Australia on the iron ore front to go ahead, and that was going to take out, what, $10 billion? Marius Kloppers putting that on the line. Do you think we will see that eventuality?
I think there's going to be a lot of political pressure in and around this transaction. My sense is that I think there is a lot of reason why it should go ahead. I think it'll be good for the industry. I think it will create a sustainable model for both entities. I think structurally it enhances profitability. Enhanced profitability means greater efficiency. And in an environment that we live in today, I think efficiency is what it's about. And people are looking to drive additional returns. And certainly from the JV, we expect significant returns from the JV.
I'm not sure whether you've had a chance to cast your eyes over ArcelorMittal today, coming out at a headline loss of 104 cents. That was for the 2009 period, and that's from a profit of over 21 Rand in 2008. Obviously, steel prices have weighed significantly and sales are down some 30%. But the outlooking statement is that they're seeing a better quarter now. Yes,
I think the results were disappointing. I think the market was surprised by the extent of the performance in the year. But I think the first quarter outlook does look positive. I think there are some structural reasons why we think ArcelorMittal will continue to perform well, return to profitability. Stock trading, I think, just below 100 at the moment. We see value in and around 100, 120. So we think there's significant upside, particularly for our outlook for the markets. We expect muted returns. We have good data to show that when the market comes off a very high PE as it is, 17.5 times, the outlook for returns over the next 2 to 3 years is usually quite muted, and with something like ArcelorMittal potentially giving a return of in excess of 20%, certainly something that I would have in my radar in terms of a significant stock holding.
Well, let's get some statement now from the CEO of ArcelorMittal, Nonkululeko Nyambizi-Haita, and this is on the cost line where ArcelorMittal is concerned.
Well, an exceptionally challenging year. I think there's no other way of describing 2009. I think most of us are very happy to see the back of it. Essentially, if you look at our numbers, the story is told by the decline in sales. We did say we would match production to sales, so similarly our production was down, but our sales were down 30%. Down at a time when also steel prices were also down. So, sorry, sales were down 12% and prices were down 30%. So that combination tells a very big story of why profits would have headed down quite so significantly. Now, at the same time, costs didn't come down as rapidly as the top line did, because as you would know, in the steel industry, we're locked into long-term contracts, typically annual contracts. So coming out of those contracts was also a fairly lengthy thing. So our costs, if you look on the flat side, we're slightly up, 1% up year on year, down on the long product side, 10% down. So your costs stay about the same or they're slightly up, your revenues decline, there you've got the whole story.
And I need to correct myself as well. Their sales down 12%, as Nonkululeko was saying, and not 30%. But coming to the Greece scenario, because that is really giving direction on the local market, and we're taking our cue from that euro dollar. The euro comes under pressure and it creates havoc around the board, because dollar strength then obviously translates into commodity volatility. What is your view on, and a realistic view on what we're seeing out of the Eurozone, Greece, the contagion now to Portugal, to Spain, these fiscal deficits? Is it something that we in South Africa should be concerned about?
Certainly, I think, Bronwyn, there is reason for concern. If you look at the credit default spreads, they are widening quite dramatically, particularly across the Eurozone and developing Eurozone. Certainly, there's fears of rollover effects, particularly into countries like Czech, Poland, areas that we've seen, particularly in Poland, significant growth. Bringing it close to home, obviously Poland's a very important market for SAP Miller in terms of the development of their business in Europe, in the Eurozone. So yes, I think there is concern. If you remember when I was last on the show, I spoke about a reflex in the dollar. Seems to be coming to fruition, and certainly we expect some reflex and sustained strength in the dollar as there's a flight to a more stable currency. I think the Eurozone is going to be under pressure for some time.
Is a sovereign default potentially on the cards, or will the European Union not allow that to happen?
I think the risks of allowing default are too high. I think we certainly will see some form of rescue package being launched. You know, there's been an on-off debate today. Will Germany come to the rescue or won't they? I suppose there are some market commentators talking about a breakdown in the Eurozone, an unbundling of the euro, and you know, the whole dream of the single monetary union falling apart. My sense is that there's a lot of embedded desire to sustain this, and so we expect, I think, Greece certainly will be bailed out should there be any real risk of default.
Perhaps the bigger risk is Spain, given the size of the economy and the relevance to the Eurozone. I mean, Greece is ultimately very small in the whole scheme of things.
Sure.
But Spain, sitting at that fiscal deficit of over 11%, they have said that they want to bring that fiscal deficit down to around about 3% in 2013. And we did see bond yields ticking up recently, obviously with that inverse correlation to the bond price, given the fact that they wanted to issue debt of around about 76 billion euros. Spain, is that on the radar screen at the moment, or are we still just too focused on Greece?
No, certainly I think Spain is on the radar screen, as is Portugal. There is a fear of contagion across markets. I think if you look at Spain, I think structurally, I think Spain has a lot to offer. I think there's a lot they can do in terms of dealing with their deficit, whereas I think Greece is in a more invidious position. I think it's a lot more difficult for Greece to deal with its deficit as it is for Spain.
So realistic that they could actually bring that deficit down from 11% to 3%, given fiscal discipline in that territory? I
think it'll take some time. I think take it from 11 maybe to the high single digits, I think is more reasonable and more attainable.